All right, ladies and gentlemen, it's another Q&A video. We did one yesterday. We answered 6 major questions. You probably saw yesterday's video already. If you didn't, go ahead and check it out. Some questions in there about the altcoin market, specifically about Bitcoin tops, what a Bitcoin bear market will look like. We're going to move forward in today's video onto some new questions from the community, covering topics such as the 200-week moving average correlating to bull run tops and whether or not that will work this cycle. Why I don't include the 2011 and usually even the 2013 bull market too extensively in my 4-year cycle analysis. Someone here has an argument as to how that could lead to a different kind of top this time. What I'm looking for to confirm a bear market outright. Someone brings up the 50-week SMA specifically. And just to clarify my stance on that, I'm taking a position of caution right now. I don't think we've necessarily confirmed the bear market, but it would not shock me at all if the top was in, because that would have been a coherent 4-year cycle top. So very cautious right now, although I don't think a sufficient macro breakdown has fully occurred. If Bitcoin breaks the 4-year cycle and continues much higher, where will it go? That's an interesting question. And also taking a look at the death cross that is incoming on the Bitcoin daily chart between the 50 and the 200 SMAs. So lots of questions. I'll move through them systematically. Actually, there's one more down here. What do I reckon the next cycle top will be if we've already seen this cycle's top? That's highly speculative, but I'll get into that anyway. Before we dive into it, go ahead and check out the Bitunix Exchange. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers. All right, let's start out with the most hypothetical question here, just for a bit of fun. It's also a question people would probably want to know the answer to. If $126,000 was the top this cycle, what do you think the next cycle top will be? Obviously, this is heavily speculative, because not only are we relying on the fact, in order to answer this question, that we've already seen the top, which, it's definitely on the table. But it also is relying on the fact that we'd see a regular cyclical bear market, and then, even a step further than that, a regular cyclical bull market to follow. So we'd see a bottom in October 2026, and then a top in Q4 2029. So a lot of assumptions, we're thinking multiple steps ahead here. But it's not outside of the realm of possibility that we could come to some sort of conclusion, because, of course, the 4-year cycle, it's not guaranteed to maintain until 2029, but it has maintained since 2012. That was 13 years ago. Another 4 years, it's not outside of the realm of possibility that it could continue. So my go-to way to answer this question is to first understand, well, the date range trend brings us to around late 2029. I assume it'd be in mid-October. I haven't actually done the data on that. It's too far away, but probably October-ish 2029. In terms of price, my go-to metric to theorize here is going to be this big channel formation. This is a logarithmic regression channel. I bring it up on the channel all the time, on the YouTube channel, that is, all the time. I think it's worth bringing up. And I don't think enough people look at things like this. I think whoever you've seen looking at this, I doubt you've seen anyone else looking at it, to be quite frank. But if they are, they might have got it from me, because I've been talking about this for a long time here. Essentially, it's a channel, again, logarithmic regression channel. So logarithmic chart, channel of regression. And what that means is every cycle we measure an angle of elevation between tops and bottoms. And what we see is that that angle of elevation halves each time. This is beyond the point of coincidence, because it's happening on the top sides and on the bottom sides of multiple data points on each. So it goes from 40 degrees to 20 degrees to 10 degrees to 5 degrees, and the bottom side goes from 24 to 12 to 6 degrees. And we can basically get a good idea of where tops and bottoms will be. The only assumption we're making is that the channel will be respected. And that is an assumption, of course, the channel will eventually break. But that's all we're working with right now. We don't have data of the unknown. The only data we have is data of the known. And the known data is telling us that this channel is currently intact. And so let's just work with the assumption that it's going to stay intact. So the angle of ascension this cycle was 5 degrees. It took us to a top of 126,000, assuming that is the real top. And adding one more step forward here, we have a 2.5 degree angle of ascension. The top would be around October 2029, and that would be a top at about $175,000. Now, I'm actually of the opinion that I don't think this channel will hold in the next cycle, provided the cycle remains the same. I think that we've, been testing this channel relentlessly, time and time again, twice in 2021, 5 times separately this cycle. I think the retests are ramping up. We're lurking at the resistance for longer and longer each cycle. I think that we'll probably be breaking this in the next cycle. But what I can say is that it looks very likely, if the cycle continues, that we should reach a target of at least 175,000. Now, a lot of people might think, oh, that's a very low target. Again, it can break. But second of all, I'd encourage you to actually use common sense here. We topped at 70,000 in 2021. And if the top is in, that's $126,000 top. That's not even doubling the 2021 all-time high to this all-time high. So there's no reason to think it should double or more next time, right? With diminishing returns, 175K is a very reasonable target. So that's kind of my analysis on what a top in 2029 could look like. Very speculative, many steps forward, but 175,000 is certainly on the table there. And obviously, if we break the channel, we'd go higher. But I think it's important to note that people always seem to overestimate the top prices and underestimate the bear market prices. This same channel points to a $36,000 bottom in the bear market. And people keep saying, oh, that's ridiculous. How could we possibly go that low? Guys, it's only a 70% drop. Bitcoin dropped 86% here, 84% here, 77% here. It dropped 15% in a day just a month ago, right? It's not a big drop. It just seems big. Moving forward into the next question. There's a question here that seems slightly confused, but I know what he's getting at. There's a trend, developing trend, that says the 200-week moving average hits the previous bull run top, and that marks around the time when Bitcoin tops in the current cycle. Will that happen again is basically the question. So let's go ahead and get into it. What is true, yes, if we go ahead and mark horizontally the bull run tops and we correlate them to where the 200-week moving average is, what we can see is that when we retest that, or when the 200 moving average breaks that previous high, when it breaks above that level that was the previous bull market top, that is basically when we see the cyclical top of the current cycle. So I've marked some horizontal lines and some vertical lines to kind of articulate this. And it is something people have looked at historically. I personally don't think it makes much sense. Because, for one, it only perfectly worked in 2017. It kind of worked in 2021. People say, oh, it was going to work, but it was thrown off by the double top formation. Cool, but the double top formation still mattered, right? It still happened, so you can't just ignore that. And this time, if it was to work, it would assume that Bitcoin would continue running until, let's just go ahead and draw, probably something like September 2026, maybe if it angles up a little bit, maybe April 2026. That's very, very far away, and that would be a massive deviation from the cyclical date range trends. I don't think there's any reason to assume that this will work. It didn't even work in the last cycle. So just cutting through some of the bad logic people are using as kind of bullish bias justification, we have to focus on the facts. Speaking of facts, why not include the bull run from 2011 in your 4-year cycle analysis? Together with the halving of November 2012, can't we use it as an example that cycles can be different? And that if we followed that, we would have a different top this time. We'd have a delayed top, perhaps. Very straightforward. I don't use data from 2011 because a couple of reasons. One reason is that was pre-cycle. Okay, that was before the first halving. We know for a fact that a halving is a fundamental event that triggered the 4-year cycle to come into play in the first place. Second of all, this is data from a time in which Bitcoin was an infant. Right, Bitcoin in the 2011 bull market reached $27. Okay, this is a market cap that can be moved by a single retail individual quite significantly in one purchase. This is not data that we can use in any real way. Even 2013, you're kind of pushing your luck a little bit. And the reason why I don't use 2013 data that much, I still use it as per the date range trends, it still works. But the reason I don't use it that much is because there was no various factors that we have in the current cryptocurrency market that didn't exist in 2013. One of them is the altcoin market didn't exist in basically any format. There was a few coins. Ethereum didn't even exist yet. And secondly, the halving in 2012 kicked us off into a cycle in kind of an awkward part of what I would consider to be the traditional 4-year cycle, which is bull market, bear market, and halvings. There's the 3 factors that make up a 4-year cycle. We had no bear market to measure from 2012 until the bear market started in 2014. So one of the 3 critical pieces of information we use to extract data from 4-year cycle, generally speaking, to make date range trends just simply wasn't there. The only piece of data we actually get from 2012 to 2013 is how many days there are from halving to tops. And we've already kind of added that into the analysis. So I don't ignore 2013 at all. I do ignore 2011 because it was pre-halving and hence pre-cycle. 18.6 year cycle is in effect. There are also other cycles that we're in, etc. Yes, and they all have existed throughout the entire time the 4-year cycle has existed as well, and yet the 4-year cycle continues to persist. So, you know, I think these arguments for other types of cycles is just semantics, really. The cycle, the 4-year cycle, has existed through all the other cycles that anyone could possibly point to, right? The trend is your friend until it ends. The trend is still intact for now. When it breaks, we can adjust. There are parts of this question I don't really understand. I can't use data where data doesn't exist is basically my final answer. And I've used data going back to the first halving from the exact day it occurred. And I think that's where the data exists. That's the start of the data in relation to date range trends. So I think I've used everything I can. If the price of Bitcoin went below the 50-week SMA for 2 consecutive weeks, would that be an indicator that the bear market has started? 50-week SMA is one of the backbones of Bitcoin analysis in terms of identifying bear markets. And yeah, what you can see if we go back even to 2013, when we lose it, it's over. Okay, 2017, same thing. When we lose it, it's over. In fact, it's been quite a delayed indicator in the past. 2021, when we lose it, it's over. Okay, the correction there, the big drop in the middle of the cycle, held on for 20 week. So did this correction here, and we finally got down to it, and that triggered the breakdown, resistance, support, flip, bear market. Right? We finally got it. We got above the 50-week SMA, very close to the end of the bear market, and started our bull market with a retest of it. So this is a critical indicator. There's no two ways about it. In fact, I would even say that one weekly candle close below it convincingly would be enough to really confirm a bear market. I think that that indicator is sitting currently at about $102,000. If we broke below that indicator, it wouldn't just be that indicator we're breaking below. There would be other things we're breaking into, like the Gaussian channel on the weekly chart, and even breaking down momentum on a critical chart like the 2-week RSI, which we know is very, very important, a massive triangle formation forming on that chart right there. It's been a chart that has marked macro tops, historically speaking, on Bitcoin since, you know, essentially the origin of Bitcoin price action. So yeah, I think a weekly candle close and certainly 2 weekly candle closes below the 50-week SMA would be brutal, yeah. And very, very possibly bear market confirming, almost certainly bear market confirming if it was convincing enough. If Bitcoin breaks the 4-year cycle, how high do you think it will go? Okay, this is a good question. Obviously, impossible to answer in any real strong, concrete way because the cycle's all we've ever seen. So what you're asking is a question about the unknown. You're asking a question about entering a no man's land of data analysis. All of the trends that we have on Bitcoin break at that point because all of the trends we have on Bitcoin basically indirectly support the cycle as per the cycle working for the entirety of Bitcoin price action. But we can try answer it. The first step to answering it is to understand where the resistance zones are. What would we need to do to break the 4-year cycle? Well, what we need to do to break the 4-year cycle, based on dates, we need to just keep running to the upside into 2026, and eventually the date range trend will break. The date range trend is slightly different to the cycle itself, but let's just work with that for now. I would say that if Bitcoin broke a channel like this, which we discussed in the start of the video, that would give Bitcoin enough momentum, along with the 2-week RSI breakout, along with a breakout of, let's go ahead and just punch it in here quickly, a breakout, ignore the messy chart, a breakout of this line, which goes back to 2017, which has never been broken before. It's marked tops on all occasions. All these levels sit in the same region, and they do that for a reason. It's not a coincidence, okay? 128,000 with that line there. The channel of regression, the logarithmic regression channel, sits also at about $130,000. And even the power law chart on Bitcoin, this big line in green here, which we've rejected from so many times in the last 18 months, sits at about $133,000. So if though that region breaks, that will lead to massive upside Bitcoin momentum, which would likely not stop and which would likely lead to a cyclical break, and Bitcoin would be looking to the stars at that point. Now, where exactly would it be going to? I have absolutely no idea, and I don't think it's possible to have a strong idea on where it could be going to, because again, upper bound resistance is upper bound resistance for a reason. It's in the name, it's upper bound resistance. There's not really much above. We'd have to look to momentum indicators for signs of weakness, things like that. Breakdown validations would be how we mark tops. Predictive capacity would go out the window at that point, which is why I kind of do want the cycle to maintain. I kind of do want this to be a bear market because that would just keep things very simple. But if we did do that, I see no reason why Bitcoin couldn't reach 150 plus. And the idea of a traditional bear market at that point would go out the window. So we wouldn't necessarily have to see a 1 year long bear market. It could be a 2-month long bear market, or it could be a 5-year long bear market. If the trends break, the trends break. You're left with nothing. We can look to macroeconomy at that point, but that hasn't happened yet. I'm just giving you an idea on what would need to happen for that to occur. And I think those resistance zones I mentioned are the levels to watch. All of which, by the way, have been rejected from this cycle already, and all of which rejected from this cycle at the right cyclical time. So that's worth noting as well, right? This is why the argument for a top being in is quite strong. Final question in relation to the 50 and 200-day moving averages. There's going to be a death cross on the 50 and 200-day moving averages, and basically this doesn't happen very often. It happens about twice a year. What a death cross is when you see the red line on the screen here, the 50, cross below the 200. I think that moving average crosses are completely overblown. I don't think they do much, generally speaking. We had a death cross back here in April, did absolutely nothing and actually marked the bottom. This is the thing with death crosses. Sometimes they can just be indicators of something occurring rather than something specifically bullish and bearish occurring. So yeah, it can't be good to see a death cross, but it's not necessarily bad alone either. It's only bad when used in combination for other things that are occurring in the charts, right? If the cycle says we're going upwards and we see a death cross, it doesn't mean we're going downwards. It just means we're seeing a death cross, which is going to be used as a fake out indicator. That's exactly what happened in April. Could happen again, but obviously the cycle says we're going downwards this time, so a downside death cross might just be a confirmation bias for bears and lead to more selling. Very difficult to tell. Crosses happen all the time, especially on the daily chart, and they very rarely even do anything. I mean, I'm looking at them right now. I can't even find one that's clearly definitively worked. Maybe this one back here in 2023 in February. That's the last one, and there's been like 5 since then. So I don't think you should worry too much about death crosses and golden crosses. I think that the names, the titles, death cross, golden cross, it sounds very hype. It sounds very emotional. People get sucked into it, but it doesn't actually do anything. What does do something are the moving averages themselves, okay? These moving averages lead to resistance and support themselves, not the crosses of these moving averages. They aren't as important. So it was an interesting video, guys. I hope you enjoyed it. If you want more questions, I did 6 other questions just yesterday in a part 1 of this Q&A series, I guess you can call it. Go ahead and check out yesterday's video. But I'm going to end it there. Thank you for watching. Subscribe if you're interested in seeing more content, and also check out the Bitunix Exchange. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.